Hello, folks. Welcome to another edition of Market Action. Dave Russell here. Well, market is just continuing to show this kind of rotation. And so we look at this now. It's a Friday with the Italian referendum coming up. I'm not entirely sure what to think here. Most of my, inclination tends to be that we're going to have, a bounce here. We'd expected a drop to this level in the S&P that we're pretty much holding now. Which was pretty much this high. Let me move this up here. This high from like the 17th and 18th. That's what we were looking at on the futures is 21.87, and that's what we're pretty much holding now. And it's a little bit, hard to tell. My opinion of the Italian referendum is that it's not going to ultimately be a big problem, but I still think it's something right now where people are just probably not really terribly eager to get long before it. So at this point, I think we've had a good run, and the question is, do we need to pull back more? I'm not really sure on that. And, one of the reasons why we have the bullish and bearish, with our strategy note, is we actually say this is what we think the market can do for the next, kind of 3 to 5 sessions. In my view, buying these pullbacks down here, those didn't have a lot of, in my opinion, that's, you at least have a flat move. You don't have real risk of downside. But at this point, it might turn into something more like that. See, the red line now is the 50-hour coming down. There's 2 ways to read it. In my opinion, when you see a range, let me have you draw this, and you have a channel or a range, generally you're going to hold that channel. And I think right now, as much as it feels kind of unpleasant, I also think that in general, one of my key rules is follow that channel. It's like a triangle. When you see that triangle forming or the channel, it will hold in there. So my rules would tend to suggest we're going to move back to the upside. However, at this point, with the referendum looming and the fact it's a Friday, I'm not sure how that's going to work out. So for right now, my view is to be kind of looking at some of the areas that we know are interesting that have been somewhat neglected. We've had this really strong momentum trade in things like metals and all that. And now what I'm doing is I'm looking at some of the good technology names that we know are good and that have been turning around or have some other positive reason in them. So Alliance Data, for example, is one that we had cited a while back. And now here it is pulling back to this kind of 220 level that we've been waiting for. I think this is an interesting one. The flash memory, semiconductors. It's all about semiconductors right now. I think that is the best place. I bought a little bit of Pure Storage today. To me, some of these names I think are going to be strong over the longer term. And I think a stock like this, it's a relatively new name. It's had some good earnings. Semiconductors have been strong. And I think that makes sense. Look at a stock like NVIDIA. I think this is another one that's just been a complete monster. Amcor as well. And, I tend to think that from these here, these are big pullbacks in stocks with significant momentum. And, I don't know what Renzi is going to do to hurt Amcor or to hurt NVIDIA. When you really think about it here, I think that, there's so many layers of separation between the Italian referendum and an actual debt crisis. There's a lot of things that all have to go wrong. And so from my point of view, it's something that it's out there and we identified and flagged it, but I think that there's a lot of negativity that's already, people are aware of. So anyway, I wanted to just, say I think now's the time to be looking for, good names and kind of looking for some of these. When the market gets to this point, we can get things chopping back up to the highs and then dying. Like yesterday, we said to buy Applied Materials, and it was down around 30, snap back over a point today. That's what I'm looking for, and I think we're going to see other bounces like that. A few days ago, we said, hey, U.S. Steel in the pre-market was down at under $31, and then boom, we got that snap back up. That's the kind of thing that I think we're going to get. But this time, instead of it being U.S. Steel or the chemicals, this time it's going to be the chips. The momentum tech stocks that have been good, not the Facebooks and the Amazons that have been crumbling, but the stocks like Juniper Networks, which has just been a monster. Look at this pullback here in the 3-month chart here in the Options House platform. Zoom out a little bit more to a 1-year view, and you can see this name has been rallying pretty hard. You know, I don't think it goes to like 30, but it can go back to 27.5-ish, you know, and with some calls in a name like this, I mean, that's the sort of name where I think buying like the weekly calls. This stock's got some good options liquidity. This is a name that could jump back up. Some of these calls are pretty inexpensive. And this is the sort of thing that I would be thinking of. The momentum, quality, more hardware-related tech names, not the ones that everyone knows, unless it's Netflix, which I do think is going to end the year back near the 52-week high. You know, I don't like Facebook, don't like Amazon, don't really like Google, don't like Apple, but Netflix is good. You know, Alliance Data. Mind you, these are the sort of things we want to look to. I think right now we can wait a little bit on the chemicals and the steels and those. They're going to be good, but they might have a little more weakness in the near term. Today's option paper is interesting. Mikey did this one early. They're coming back to JetBlue. These airlines also. I mean, if we get just the slightest bit of pause in the, you know, in an energy rally, Jan 22 calls bought in JetBlue. This one's really nice. I mean, this one didn't even pull back to any clear level. It's just cranking higher. XLF. Now, this is one that had calls rolled the February 24 calls rolled to the 25. We did this alert, and the main reason is that what do we have with those Feb 25 calls? These were purchased today. But the nice thing about them is they don't have very much delta. So what do we say with things like this? We say when a stock's going up like this, so you can see these calls were sold, these were bought. When we did the alert, they were going for 8 cents, 9 cents. Now they're 9 cents, 10 cents. You know, I think basically this is the kind of thing that makes sense. This is like when Bank of America was cranking higher and we said we want less delta, more time. Well, what do these calls have? They only have like 10 deltas. They have a fair bit of time, 78 days here in the Options House platform. You know, we can see the delta is only like 11. This is sort of thing where, you know, XLF could sit here for a week or two, several weeks, but, you know, we have the Fed coming up in about, 2 weeks. This idea that, you know, the interest rates have not stopped going up. I mean, I don't think that they just go straight up from here, but I think that, and I've heard other people who cover fixed income, we do have this level on the 30-year chart here, that 3 1/4 level, I think up here. I think we're still likely to see that push up in interest rates, and I think that the momentum in financials, most of the move has happened, but I think that there's still a pretty strong momentum in them. So I think something like the XLF, out of the money, lower delta, more time, less expensive options to the upside, those calls make sense. Unlike a name like Juniper where you want that bang, that gamma, the cheaper, but you want the gamma in those for a quick just snap back to the upside. JetBlue, XLF I mentioned, Steel Dynamics, Jan 37 calls. These also have some time. They're not really, you know, I mean, they're a little bit out of the money. They were buying these Jan 37 calls. Let's take a look at a longer-term chart of this name because I think there is something pretty interesting in this. You know, this stock's got a pretty clear like lineup here over 40, and you know, for me, you know, I think an object in motion tends to stay in motion. I don't think anyone's going to sell this stock until it goes over 40. And I think that there's a possibility that this just keeps nosing higher. Now, the thing is that we have very little economic data going forward. After the Italian thing, it really quiets down. So then next week, by the way, it is interesting because next week the ECB has said that their next meeting, they're going to, I think Draghi said it a week or two ago, he said, next week we're going to really tell you the future of QE. You know, will QE survive or not, or will we start scaling it back? Well, take a look at the PPI today for the Eurozone. I mean, it was twice the estimated numbers. Some of the numbers out of Europe have really not been terrible. Some of the other stuff we've seen, the Eurozone, that was October. The unemployment was the best, is currently the best since July of 2009. The October reading yesterday was 9.8 versus a 10% estimate. You know, we mentioned that recently. So I think right now, you know, there is a possibility when you look at what's happened to the U.S. Interest rates and everything else, you look at the way German yields have been moving up, now could be the time that the Eurozone starts to take the training wheels off the bicycle again. And, that could be good. And if we get through the Italian, referendum and then the ECB takes away QE, it could actually turn into exactly like everyone says, oh, no, Trump would be terrible, and then everyone says Trump's wonderful. Well, I think it's one of those things where no one wants to be the first guy to say we need to raise rates or take away QE, but then when it happens, everyone says it's a great thing. And I think that's going to be something next week to think about here. All right, talking about interest rates, the utilities have been bad. They're bouncing today because in my opinion, today's non-farm payroll was kind of weak. But take a look at First Energy. This is a utility stock that, look at this long-term chart here. Mikey and I were talking about this one, and we did see some significant downside activity in FE. This stock is just trying to cling to 30, and they're buying the April 25 puts. I mean, that's what I'm talking about. If we get that next push higher in interest rates, this thing could go through 30, I think. So what they're doing in this one is pretty significant size. Take a look over on Research Lab at the options activity. It's not loading correctly. But anyway, they were buying the 25 puts in some pretty significant size. So let me just jump over here to our activity log. You can see this on FE. If we look at the puts today, these are the biggest puts in any individual equity, 34,000 of those contracts. In fact, it's the biggest puts anywhere in the market. This page on Research Lab will actually let you find the busiest calls and puts by equity and ETF. And if we look at puts and then equities, we can see 34,000 contracts with those FE, Feb 25 puts. So someone says, you know what, First Energy is not done going down yet. XLK has some put buying. Take a look here. We actually see it on here. This is XLK. That's not big enough. But XLK today did have the December 45.5 puts bought. I have that one up on the activity log. I'm noticing more and more that we're actually seeing some of the traditional sectors. They're not always, aside from utilities and REIT, which are so obviously linked to, to interest rates, we've kind of seen some divergence. Like within XLK, we've seen, the Apples and the Amazons weak, but the chips have been awesome. And I think we're seeing, it's just interesting to see that. So I just wanted to point that out about XLK. We've seen it also with some of the different things with materials or consumer discretionaries where we've seen this divergence within the sectors that I think is somewhat interesting. So XLK has those 45.5 puts bought. Mondelez, consumer staples, not really the best place, MDLZ. The February 43 calls were bought in this name, and then they're selling the 46 calls. But they sold twice as many at the higher strike. So this is pretty interesting because if we look at this 46 line, what do we have there? We have a pretty clear resistance. So by buying those 43 calls, and this is something you can do, folks, just to understand the way these strategies work. Say you're long a stock and it goes down and you're like, oh, man. Then what you can do is, all right, so say you own 100 shares in Mondelez at 44, and now it's at 41, and you're miserable. So what you do is, in this case, if you wanted to follow this approach or this technique, you would then, say you're long 100 shares, you would buy, one call at the 43 line, and you would sell 2 calls at the 46 line. That's a ratio spread, which is what they did here. It allows you to leverage the move back up to 46. 46 is the logical resistance or top of the range on this stock. So the ratio spread in that case is being used essentially as a vertical spread that's also a covered call. You never want to be naked short calls, but because you would have those shares, it would cover you in the move up to that level. So it's interesting to see that 46 level getting targeted on Mondelez. It's pretty much textbook activity. MUB, this is a weird, I've never even seen this before. It's some kind of municipal bond fund. They're buying the Jan 106 puts. Again, looking for continued downside in fixed income. This is not something we see very often. I've never even seen this thing before. There's put selling in Verifone, PAY, which makes credit card readers. I haven't looked at this stock in a long time. Obviously been struggling. Take a look at more of your questions. Okay. Have energy stocks run their course, XLE? I don't know if they run their course. I just think they're overbought. Maybe we get 73 on the XLE. and that's an opportunity. That's what I think. Look, I think that the real story in energy isn't energy. The real story in energy is steel, industrial, that kind of thing, railroad suppliers. The thing is, as long as oil holds this 40 to 50 range, the domestic production will take off again, and we're going to see that in the U.S. economy. And I think we're going to see a lot of stuff in the domestic economy. I mean, it's not just, oil, but I mean, these things involving this political change, this is a pretty big deal. And I think we're going to see more of it. It's interesting. First, I'll see this level right here. This is around, let's say 73.30. That's where you want to get back into XLE, in my opinion. I'm not super, sure that the XLE is just going to be the best area overall. I do think that there are other areas, like the steels and the chemicals, that I think will actually perform better. It's interesting. I saw recently, so first of all, some of these economic numbers, I have it down here in the strategy note, but, the numbers coming out of the China zone, South Korea revised down their GDP. I'm thinking that China is really not. I added a new long-term, observation here to my note, and what I basically said was China is at risk of further weakening based on recent data like the Cakes and Myths. There's the Cakes and PMI. That's one of their indexes. It's basically like their ISM, although China has like 4 different versions of ISM. The industrial production was weak on November 14th. Also, and I noticed this, I went back and I found this interesting interview with Wilbur Ross on CNBC about 3 weeks ago, and he basically said that China is cutting back on their excess steel production. So, I mean, that's not good for the overall economy. Now, obviously, I think we all know that China has had overproduction of certain things. It's like they only became a halfway, capitalist country. They still have a little bit of the communist, command economy at work. So China has been overproducing steel like for the last decade. And now there's a report, from what I can tell, if you Google this, you're going to find articles. And Wilbur Ross was on CNBC about 2 weeks ago, and he said this. He said, I was in China, they're cutting production. There are articles about this. I think we're going to see China weakening. And you know what? We saw it with the Australian numbers not so hot. We've seen it with the South Korean numbers. It's a whole zone over there. So I think right now we're going to see, and then you add on top of it the domestic thing, the U.S., trying to, look what they did to the carrier thing. Well, if you're a Chinese businessman right now and you say, hey, should I open a new factory and hire 1,000 people when you see what Trump just did to carrier in Mexico, I think the answer is no. And I think the expectation is now that China, its engine has been exports. They've been weakening. I think you're going to see China. I think now could be the time that China gets ugly, and I think right now we got to be pretty careful about that. We've had some bounce in some of these Chinese names. I'd be very, very cautious that it will continue, but it's not necessarily bad for the United States. It might actually be a good thing in terms of what happens for us. So I just wanted to point that out, that I think China is at risk. Something else I wanted to point out here. First, I'll turn to more of your questions. CVX, Chevron. I mean, this is identical to, let it pull back to maybe, this stock's run a lot. I don't like that candle yesterday. I think this stock's going to pull back under 110. I'm not sure exactly where the level is, but this is going to be one to let it really pull back down. I'd say almost down to like this level here. No need to rush your way into this. This is a big name, and it's run too fast. Let me see something. By the way, if you guys have trouble with the audio, you can reload. It's something I've heard, and someone was complaining about it. Operator, can I ask, if we had any audio issues today, do I sound okay to you?
I can hear you just fine, sir.
Thank you. All right, Honeywell. I don't like this stock. I don't know what's going on, but their numbers have just been bad, and I don't think you should be short industrials because I think the sector is good, but I think this stock is just a bad name. I like, for me, I like Chicago Bridge and Iron. I bought this one when it was back under 32. Someone is trying to break it today, but I got to say, I think 32 is a good level. And I was actually having it on my list. I think it's worth adding to CBI here. Another one that is not an industrial, it's a material stock, but it's the same sort of Trump, inflation, infrastructure, etc. Vulcan Materials. This had a nice Trump rally. Look at it pulling back now to the old support level. So I think this stock, VMC, is probably worth a look as well. Now, let's take a look, talking about the Trump rally. This has been, to me, stunning. Let's take a look here at the IVE. Now, I know they call it value. I think it's a little bit misleading. Basically, IVE has stuff that isn't Amazon. It has stuff like industrial stocks. Now, let's go here to our display on the Opportunity platform, and let's compare IVE to IBW. This is the growth index. So now, basically, this is growth down here. IVW is growth. IVE is value. Look at this insane divergence in the last month. I just think it's really interesting. But I did want to point that out. And the thing that I think right now is, look, I am not a huge fan, obviously, things like Amazon, but some of these growth stocks right now, and that's what I'm saying with the chips, these guys have totally lagged. And that pullback in the semiconductors yesterday, I think, is a gift. So I think this is an interesting area here. I think we're going to continue to see this preference of cyclical growth stocks over secular. But this divergence is extreme. I don't know the last time. When you look, they've just gone in opposite directions. So I think this is, they'll move together, but look at this separation between them here. So anyway, I just think that I'm going to try and do a story over the weekend and actually run some history. I'm going to try and get the Excel spreadsheet and try to actually analyze to see when's the last time that we saw this kind of divergence between the two on a relative strength basis. But this is pretty extreme, so I do think that's pretty interesting. All right, covered most of those points. Next question is, how do I feel about the idea that people are going to be investing in industrials because of Trump and they need to sell winners in tech? Well, I agree with that, but I think it's been done. So, I think the problem is tech is a really I've never liked that name of tech, and I think it means less and less because you have companies that are really different. And I think at this point, like I said, semiconductors I like, Juniper Networks I like. Some of the things that we saw in some of these telecom, these are no good now. I don't know. These are just, there's no real edge in these. But I think that Amazon, I think there's a lot of reasons why Amazon and Apple are bad stocks right now. I think there's a lot of good news priced into these, and they're just, Apple's not overly expensive, but, the chart is just really sloppy, and I think you're looking at a great stock, well, a company that, past tense, it was a great stock. And now if you really look at this, it's making a lower high versus where it was in 15. So I think you're looking at a name that is done going up. And, I know it's been amazing and runs, stocks like this, everything has to end. And so I think the big tech, and don't forget that the XLK is like 12 to 15% of XLK is Apple. So, I think that you're going to see that, but I wouldn't just say that everything in the XLK is bad. I think the real issue is I think you're going to see within the XLK, like I've said, hardware and semiconductors are going to be good, and the names like Amazon and Facebook, I think, are going to lag for a while. But I do agree that there has been some of that. What do I think about Ulta? Well, I bought Ulta today. Like I've said, this stock has been, to me, somewhat like hitting my head against the wall. And I've just decided that I'm just going to hold it. I bought it just under $250, and that's the problem. This stock is not fun to trade at all, but it's an awesome company. And these guys were just great on every front. The earnings last night, from what I can tell, were just really good. And this company is a lot like Stamps.com, where everyone hates it, and then the thing just explodes higher. And, wow, look at this pullback in Stamps. This is pretty good to me, too. Both of these are companies that have huge short interest. They trade really sloppy, and they're not very liquid, and they jump around. But, this is I'm going to add this to my list right now. I haven't looked at this one in a while, but, if we look at Stamps.com, it's had consistently good earnings. So I think this one is good. I think Ulta here, I liked it under 250. I think it's going to chop around here, but again, I think this is one that is going to. I think it's going to rally. I just don't know how to play it. That's the problem with this name. By the way, they did report earnings last night. I'm going to just add it right here. STMP. The other one, GoGo. I think this is another name to consider. This could be a name for next year, but this is kind of holding support down here. This is one that I think, you just want to buy a little of it and wait, because this is another one of these names that has, they seem to just be coming off the lows. The chart is starting to turn. It's not ready yet for a real sort of, rally, but this is one that has also huge short interest. Their business is turning around, and I think this one down here is worth just kind of nibbling a little bit. Now, speaking of semiconductors, Xilinx had call buying not that long ago. Let's take a look over on the activity log. We did an alert on this one. Xilinx had the Jan $57.50 call bought back on the 28th of November. I mean, this stock, I think, is poised for a breakout. But look at the way it's just holding right here. I think Xilinx is looking pretty good as well. So I think this one could break out. I do think that the utilities, the REITs, they're bouncing today. I mean, don't forget, that jobs report was just kind of like, but this is good. I mean, this is a Goldilocks jobs report. It was kind of just in line with estimates. The unemployment was good, but if you actually dig into it, wages were bad. The previous 2 months were revised down by a net 2,000. But what I thought was interesting, and we did mention this in the strategy note, was we did like the construction continuing to improve, retail not looking good. So, I think retail here, I've liked some of these retail names, especially JCPenney, which I think today Bank of America had a bullish note on, if I remember correctly. But, retail overall just continues to look kind of sloppy and difficult. But I think that's more of a secular issue for brick and mortar stores, not a problem for consumer discretionaries. I think we're going to see, I'm waiting for just a little bit lower in GM here, a little bit lower in Ford Motor. I think the consumer discretionary trade, some of these stocks are turning off the lows, and these are names that I think this is the way I think to look for the consumer discretionary move. So I think some of these auto stocks are also coming off the lows, and these could be names that could have good rallies next year. What do I think of Alta? All right, on semiconductor. We have a bullish trade in this. I don't know. I mean, this is a name that it's holding support. I'm not sure why it had the bullish paper. I mean, the earnings don't seem that good, but when you look into names like this, it's all about the price action, and I think this is actually a really good level in this name. So I think on semiconductor is attractive here. I know we had the alert at a higher level, and, we do the alerts when the paper hits. And I think it's attractive here, though. What do I think about CBOE? I don't know why it's up today, but I know that we had a nice trade, thing in ICE, and another one that we've been watching. We wanted CME to come back under 110, and it never did. So these exchanges, I think, remain. I think these are good companies, and I think when you look at it, let's take a look over on Research Lab. So these, it's bizarre that a company like CBOE that basically, was the first public, options market. It's a great irony when you really think about it. Look at this; it trades an average of 1,200. I mean, this thing used to trade like 100 contracts a day. It's moving up the rankings. The thing about these companies is they don't trade a lot of options. Take a look over here. We've recently added. Wait a second. Member performance. We recently added this functionality, and I really encourage you guys to use this because the thing is, options are awesome when they work or when you have liquidity. And when you're looking for groups, if you go to, on any group, member performance, you can rank the companies to see who trades the most options in this grid. So I would just encourage you guys to use that. It's going to be something that's going to help we love to use options when they are the correct instrument. And in my opinion, the way to look for that is go to that thing on Research Lab, and that's how you're going to really find if the liquidity is there. In general, when things trade fewer than 1,000 contracts a day, it's going to be frustrating sometimes to be trading options in them. And I really like to see more like 5,000. I'm not sure why CBOE is up today, but I think that the whole sector, let's take a look here in this group. This whole group has been steadily outperforming the financial exchanges. I think it's bullish, but I'm not sure why. I just know that the group's been outperforming. We're in a secular bull market, and some of these companies have been adding other products and services. And yeah, I mean it's bullish, but I think that it's gonna get better entries. I'm not sure where, but when you get this will be something when you see the breakout in a name like this. Let's take a look at the 5-year chart. Yeah, I think we've got to let it break out that high from last year, but it probably will. Some of these companies have a Trump angle as well. The idea, and I'm not sure what it is. It might be, I know Ben, there was something I think about these guys bringing cash back from overseas or something. I need to look into these. I'm going to make a note. Wait a second. All right, let's continue. Is Whiting still going to 14? Yeah, I think so. I mean, it's this is kind of like the banks. I think out of the money, lower delta calls with some time, and then one day you'll wake up and you'll be like, oh my God, those calls are awesome. Well, at least that's kind of the way I think it would be. I mean, those banks, we had identified some like Bank of America and you know. Yeah, we had calls from, like back here in like October, November, that and it went up like 1,300%. And my view is Whiting is the kind of thing where you could get something relatively, aggressive to the upside when the stars line up correctly. So, yeah, this name's not done, I think, and it's got a lot of short interest still. Again, a lot of these companies are like, all they need to do is not go bankrupt, and they could double. Because when you have companies that are trading way below book value with massive short interest, like Whiting has, you can get aggressive moves. What do I think about Walmart? Well, I was saying I thought Walmart was going back to 74. And I still think that's true. I mean, I think it's going to work its way back to 74. Qualcomm, we had bullish paper in this one. I do the paper when it comes up, but I don't know if it is the best name. I'm not fond of stuff with the M&A uncertainty. They're buying NXPI. I don't like Qualcomm as much. My favorite, I mean, I said AMAT. I still think that this is probably it's up a bit, but I think NVIDIA right now and Amcor. I think these are your two best chip stocks right here and right now. CCJ, Kamiko. I don't know. This company is like they have a lot of weird news where you have to read strange things about contracts for their selling prices of uranium and stuff. I'm going to pass on this one. Is Century Aluminum still a buy? Well, we were saying that Century Aluminum was going to pull back to a key support level, which it's holding. Look, I think it's either going to bounce here or it might go down to 8.5. I'm really not sure. I'd say, I mean, it could go to 8.5 still. I wanted to put it on our list because I feel like this is going to be a stock that's going to take a slam down, maybe 8.5 or even 8, and then suddenly just explode higher. And it's going to also depend on the macro sentiment toward the other metals. Let's take a look at some of the other metals. Wow. No, they're still doing pretty good. I'm long BHP, which is just kind of hanging in there. Yeah, I think it's probably worth buying here. This momentum has been so strong in these metals. Yeah, I think that there's some really good momentum in this, and I think this will probably be the place where it bounces. It seems to be holding here, so I think it's probably going to bounce from here. Am I a buyer of U.S. steel here? No, I'm not. In our morning note a few days ago, we said that we wanted to be buying it down around 31. I think this is going to keep cranking higher, to be honest, but I think the way to play it was, again, the same as before. Out of the money calls. You don't want too much delta in a name like this because, one or two bad days can be painful, I'm not sure these calls are really expensive. I don't know what the right approach is in U.S. Steel. I think they're going to keep going higher, but, the other thing is, let's take a look at a longer-term chart of this name. This is probably going to keep going. I think the thing is, you're at a point now where there's a real year-end thing happening, and like I said, I think right now, the story, these were oversold. They had the Trump thing happen, but then beyond that, I think that we have, I hope I'm not making too big of a deal of this, but I've just come to learn that these things are real. Wow, here we get Ford. I've set a price alert if Ford goes down to 12.20, and it just came up there. Let's take a look at Ford. But I've just come to realize, that industrial jobs are a big deal, and I am a big believer that the industrial jobs kept us out of recession in 2011-12, and a lot of that was tied to energy. So Ford's getting near a level here, folks. I think, look at this high from Wednesday. If we get down there, Ford's going to get interesting. So I want to mention this right now. I set that level at 12.20 on Ford because I wanted to be a little bit above the curve. But, this stock is get down to 12.10 or something in that range. I think it's going to be buyers in Ford. All right, now, Ford had very good monthly auto sales, and they were doing F-150 pickups, which are just margin. All right, in terms of, the metals, my point is just that, and I feel like I'm just really, broken record on this right now, but if we have oil, between 40 and 50, and this, we're going to see domestic production, the rail suppliers, the steels, then you add in GDP over 3%, then you add in China cutting steel production, then you add in the fact that China is probably going to dump even less on the U.S. because they're going to probably try and be nice to Trump in the beginning. You put all that together, I don't think U.S. Steel with that short interest, I think an object in motion tends to stay in motion at this point. It's run a lot, but I think that the momentum in this name can remain to the upside. Don't forget, we've had a lot of stocks that if you look back to the 2008 crash, look what the financials did. They are only now retracing that move. And like I said in the alert this morning, I think the XLF, the next level to look right here, this is a 10-year chart with monthly candles. But we have a low in August of 2007 for the XLF. We've seen that's why I did those calls. That low right there, and right now we're breaking the low from November. See, so we have one low that we're breaking. My lines are not perfect, but I think you see what I'm saying. So, and I think that's really the thing to bear in mind. Well, you know what? The steel stocks, U.S. Steel, has not yet retraced the 2008 crash. And I think there's going to be people saying, wow, well, here's a stock that's still trading at depression levels. And, I think that's going to remain an upward, force on a name like U.S. Steel. So that's what I think about it. XOP had a call roll today. Take a look here. We can see, obviously, the oil-related name. The March 42 calls rolled to the 47. This is what you'd want to see people doing. Again, they're reducing their delta. They have a lot more time value now. They're not rolling out in time. They're just rolling up in price. But this is the sort of thing where they took probably a huge amount of money off the table. Let's take a look over here on the activity log at XOP. But you can see that they sold, wait a second. Wait a second, I made a mistake. Oh no, here we go. There's a put roll as well. Looks like they rolled short puts. The call roll was here. So what they did was there's two things there. I just realized that. So the 42 calls were sold for $2.99, and they bought the other calls for $1.12. So they basically recovered 2/3 of their capital at risk, and now they reduced their delta significantly. So this is exactly the sort of approach that we have cited before. HLT has some call buying. The hotel stocks have shown, scattered strength as well. Also consumer discretionary is economically sensitive. And they're buying the Jan 25 calls in HLT. These are right at the money. So it's one of those things where, a couple of bad days can be painful. These are also chopping across the resistance here. I mean, it's not an exact level, but we have some resistance here that these are chopping at, this kind of zone. And they're just looking for a breakout in HLT. Another thing I thought was interesting is Lael Brainerd, who is easy money commander-in-chief at the Fed, basically gave a speech today. And, she didn't even talk about, for the second time, she just chose to pontificate about some random academic issue. So I think the doves are in hiding for now, and it's just an interesting thing to see that. She was talking about financial technology or something. Some other names I think to look at, I think Garmin, this stock is one we've liked. It just continues to work higher. It's its own sort of stock, but, this looks pretty bullish to me. It's just, we're about to get the golden cross, the 50-day coming through the 200-day. This stock might pull back under 50, but I think this stock's another one that's just a winner. I've liked this name for a long time. I don't own it now, but it had a great earnings report. It's had two good earnings reports in a row, and, I like Garmin here. Wait a second. That was the wrong chart. It's Friday, folks. Apologize. Yeah, but still, somewhere going to be around 50. This is going to be a stock that I think, in this zone here at these highs, 49.50, if it even gets down there, it's going to be a nice one. By the way, Pure Storage, PSPG, I mentioned that I just started nibbling on this one. Their earnings are good. Guidance was good. Semiconductors were bad yesterday, so it got beaten down. But again, this is another one that I think we're just now getting that 50-day going through the 200-day. This stock is now seasoned pretty well, and I think it's slowly starting to grind to life. Microsoft, I'm not a big fan of the stocks like Microsoft, but I do think that along with Netflix or the large cap sort of NASDAQ names, this one's been good. Their earnings have been good. The 50-day moving average here, this one is probably going to move higher. We get great options liquidity in this one, so we can leverage it pretty well. All right. So I like Palo Alto Network at these levels. I don't really like Palo Alto Network at any level. This stock, I think, stock's going down a lot. I'd say just forget this thing even exists. These names are so tired at this point, this network security stuff. Man, I didn't even know about this gap down, but I think this is looking very ugly. Look, it's going to bounce around a little bit, but this one's looking very bad at this point. And I think when you look at the longer-term chart as well, it's made a lower high. This looks bad. I think it's going under 120. If you do want to buy it, I think it'll go under 120, but I wouldn't even buy it there. Stocks like this tend to do bad things, like suddenly put out profit warnings and then get cut. Suddenly the next thing will be at 80. It's that kind of stock. When you look at the multiple on this thing, a stock like this could still go down a lot. Where's the PE ratio? It's infinite PE. So, I think this stock is very risky. I would not buy it. Do I like Expedia? They've had some good earnings. It's been one of the, as far as e-commerce goes, this one's been better. I don't know. I mean, I think it's had good earnings, but the problem is I don't really like this area of e-commerce. Um, this is probably a good place to take a look at it, though. I'll tell you, I've been pretty bad with this stock in the past. This is probably a good level, though. Yeah, I think it's pretty good here. There was a lawsuit against CBI today, apparently. Let's take a look at BUD. Question about. It's just kind of down here holding support. We had said to be thinking about selling put spreads in it, and I still think that's probably the right approach. You're just kind of chopping at a support level down here. When something's at a bottoming level like this, I'll often say, it's just kind of down near support, and I'm often not saying just buy it now. What I'm saying is when these things have the momentum against them, but they're at a level, they'll just chop down. But I think the stock's probably going to hold here. All right, let's see. COP. COP is going to be the same as the other oil stocks. They just need something of a pullback. Well, the thing about Ford is, all right, let's take a look at Ford, and then I'm going to have to jump. But the thing about Ford is, down here on this pullback, this is a stock that's going to have some pretty nice options liquidity. I would say the way to play something like Ford here. I think it can still go a little bit lower. I think it's going to go down to like 12.10, and then I think it could be interesting with like weekly calls. This is a stock where you can go in the money and often have a pretty nice entry. So I mean, something like this, I would say the way to play this would be something like say we wanted to buy it right now. Well, these are lousy bid-ask spread on this. This is one that has often been good for in the money. I mean, these, when you look at them, these 11 and a halves, these have got barely any time value at all. So I would say the way to play it is let this thing push down about another 10 cents and then go in the money and buy it. And I would say the 11 and a half would be the way to go at this point. And you're going to have a lot of delta. This is different. This is a stock replacement strategy. But Ford, like Bank of America used to be, is a stock where the stock replacement can really work. That's what I would say to be the best thing to do in Ford. That's what I think is the way to go. All right. So have to jump. Hope everyone has a great and profitable end of the trading day. But I'll take one more look here at the S&P. Like I said, I'm really not sure at this point because with the weekend and stuff coming up, I think some people might just kind of wait. I don't think we're going to break lower here. I think we're just going to kind of hold. And like I said, I think some of the opportunities are going to be some of these, the chip stocks, these things that are down like NVIDIA and those guys. I think those are probably, to me, the best opportunity at this point in time. If you look at the hourly MACD here, it has turned and we're holding the bottom of the range. Like I said, to me, I have shorted the market at these levels in the past, and I've never made money doing it. So I think that at this point in time, the overall momentum on the S&P is still, the daily chart is still very bullish here, and I tend to think at this point that we're going to work our way back up. So from here, I don't think we go much lower. But I think it's also best to wait. The thing is that we might not go straight up either, which means if you want to play the futures, it could make a lot more sense to wait until, The other thing is with don't forget, the futures do actually start trading on Sunday night. So I don't know what the timing of the Italian referendum is. So that is something to think about, that the E-minis are going to open up. I think we can take a look right here. They do open on Sunday night, the trading hours. So they're going to open at 6 p.m. Eastern. on Sunday night. So that's another thing to think about. Again, another reason why enabling futures on your options house platform is a terrific idea. Hope everyone has a great weekend. We'll be back on Monday. Take care, folks.